If you don't think the markets are rigged, just by chance, maybe you're a new subscriber of mine and you weren't really sure, or maybe you thought, no, there's not a chance in hell the stock markets are rigged. No, it's a market. It's a free market. In case you were wondering, this is the data you need to hear about. You will leave here, listening to this. This will be a short video too. You will leave here, excuse me, saying, okay, yeah, that was pretty obvious. This market has got to be rigged. Zero Hedge article. Stocks rebound as Chicago PMI changes its mind and corrects earlier dismal data to highest since 2014. So dismal data comes out, and then 2 hours later, new data comes out. We got new data on that. We made a mistake on that first day. Here's the new data. Oh, markets rally. Markets didn't like the first data. Started going down. It was in the red. Just change it. Just fix it. If stock market's falling, stock market's my title. Stock market's falling on bad data. Just publish fake data afterwards. Markets rally. Ready for this? What a total farce. After Market News International reported a dismal 4-month low drop in the Chicago PMI this morning, which sparked a decent reality check drop in stocks, they decided to change their mind. 9:45 Eastern Time, a.m. U.S. May M&I Chicago report business index at 55.2. Estimate was 57.0, lowest since January 2017. Markets didn't like that. Whoa, wait a minute. 11:21 a.m. Eastern Time. Correction. U.S. May M&I Chicago report business index at 59.4, highest since November 2014. Markets rally. And if you want to see the chart, here it is, in case you want to see this. Correct U.S. Here it is. Markets don't like it. Oh, here we go. Great. Wonderful. Meanwhile, M&I had a complete press release with a full breakdown substantiating their earlier report that showed the 4-month lows in the Chicago PMI. So here's the original data. First monthly fall in business confidence in 4 months. Production lowest since October 2016. Prices paid eases for the 3rd month in a row. By Shaley Mittal, Chicago M&I, the M&I Chicago Business Barometer decreased to 55.2 in May from 58.3 in April, the lowest level since January. Optimism among firms about business conditions eased for the first time in 4 months. 3 of the 5 barometer components led May's decline, with order backlogs and supplier deliveries increasing. After rising for the 3 consecutive months, or not for the, but for 3 consecutive months, demand lost ground in May. New orders fell by a hefty 9.6 points to hit the lowest level since January. In line with lower orders, production also receded, although by a softer margin. The indicator was down 3.8 points to 55.7 from 59.5 in April. Order backlogs remained under contradictory territory for the 6th consecutive month, although rose by 4.8 points. Suppliers took longer to deliver key inputs, with the respective indicator 4.3 points higher at 60.3 in May, the highest level since September 2014. There were reports of longer delivery times due to suppliers running out of products because of maintaining low inventories. Why do they have low inventories? Because when businesses are struggling, they keep the inventories low. They don't have a lot in stock. They lower them. Companies accumulated inventories at faster pace yet again. The inventories indicator was up by 3.4 points to 56.7 in May. The employment indicator remained broadly stable after leaping out of contraction territory last month. Although the indicator has expanded only 8 times in the last 24 months, it is showing tentative signs of a pickup, sitting above 50 in 2 of the last 3 months. Panelists reported a rise in temporary hires and cut in executive level positions to manage costs. This month's special question asked firms if they planned to expand their workforce in the next 3 months. Over half of the respondents planning on hiring, a sign that businesses were optimistic about demand in the summer, while a third of respondents did not intend on hiring. 14% of them were not sure. Of those who were keen on expanding their workforce, 40% intended on hiring permanent employees, 33% temporary employees, and 27% Percent expected a mix of both permanent and temporary. Again, here we go with the temp stuff. Although unemployment's down, or you hired a bunch of temporary waitresses and bartenders. Well, they're considered employed, aren't they? Well, unemployment level's down. Anyways, that's just part of it. Also, quite conveniently, employment has been revised dramatically higher, Zero Hedge says, from 53.7 to 57.1. So, fake data, huh? Chicago PMI has just been changed because the first print they gave, markets didn't like it, change it, fluff that number, and fluff that number, reprint, market rallies. This is a rigged market. You're telling me that all someone has to do is change the damn news on something and markets rally? Or is that just that the Fed needed an excuse to rally and pump the markets up? Because, oh, this is dismal data. This is bad. We really can't make them, even though we've done it before, make the markets rally when it's crap data. We really can't do that again. Can you revise that, please, and instantly release it as soon as possible? No problem. 2 hours later, got you covered. Markets rally. Fed steps in, pumps it up. I'm Bernanke, and I'm Yellen, and together we're going to pump you up. Talking about the market, of course. Take care.